Hi, I'm Tatiana Deravidisyan, Head of Business Development for Economist Impact's World Ocean Initiative. The World Ocean Initiative is a mission-driven project of the Economist Group that supports the development of a sustainable ocean economy, addressing the greatest challenges facing our seas: climate change, biodiversity loss, and pollution. Year-round and at our flagship World Ocean Summit, we inspire bold thinking, enable new partnerships, and explore the most effective action for a healthy blue planet. Welcome to this discussion on World Ocean Day, Valuing Natural Capital. I'm joined today by ocean industry leaders and experts. Josh Hasdell, Senior Manager for KPMG's Strategy and ESG Division in Canada. Marissa Drew, Chief Sustainability Officer at Standard Chartered. Whitney Johnston, Sustainability Director at Salesforce. And Anna Prasau, Project Manager for the Blue Economy at Ocean Azul Foundation. You can find the full biographies of our panelists on the screen. Welcome, everyone. Natural capital is central to the fight against climate change. Sustainable and economically profitable marine ecosystems should be a global priority for long-term ocean health. However, marine environments, which are rich in natural resources, continue to degrade at a rapid rate. Blue natural capital, such as mangrove seagrass and whales, is an undervalued asset. As well as contributing to ocean biodiversity, these natural resources function as carbon sinks. Mangroves and seagrass also help build coastal resilience in the face of climate crisis. This session is going to explore how to protect and value blue natural capital in a credible manner. We will hear from our speakers about the role of stakeholders and in creating nature-based solutions to aid marine resources, with a focus on how to attract greater investment in projects that contribute to a healthy blue economy. Josh, you're interested in understanding what the key priorities are when you look at valuing blue economy assets. Can you share with us your thoughts on this?
Yeah, there's a lot to think about. If I'm honest, when we as we can understand, when we think about 70% of our world is covered by the ocean. So when we think about what are our priorities, especially around valuing and integrating it into kind of corporate strategies and our day-to-day activities, there is a lot to think about. And I flip between thinking about understanding the ecosystems to the nth degree, because we need to understand just how pivotal certain natural assets are within an ecosystem structure. And I think that's part of my marine biology background as well, is wanting to understand the science behind a lot of things. But then looking at the practicality of that, actually, it takes a lot of work to understand every little bit. And actually, we don't want to be I balance the priority of striving for perfection versus pragmatism. And actually then looking at how we can start actually using the knowledge we have right now to start valuing and investing and protecting and working with nature, and then devising kind of different investment structures or capital structures and how to actually utilize nature-based solutions as part of our climate agreement, with climate strategies as part of our day-to-day work. So part of what I look at as well is another priority I have is actually looking at communities and indigenous peoples and how they've been operating with the ocean for many, many years, and looking at how they've been working within the bounds of nature as well and learning from them. And I always think there's no revolutionary new idea on how to utilize the blue economy and how to value natural capital when we've seen communities engaging in it for generations. So I find a priority needs to be understanding how communities have been living and working within the bounds of nature for years and years and years. I think one of the other priorities that I look at is making sure a lot of our work is credible. When we start talking about carbon, and I know we're going to get into carbon in blue carbon quite a bit in this session, is there's a balance between using the ocean to meet some of our kind of high level needs, but then actually having a way to actually credibly use natural assets within the ocean to help kind of meet our core objectives as a society, the decarbonization goals, meeting those climate scenario targets that we have in place, but making sure we're not just doing a whole load of different things just because it sounds interesting, and actually being very clear on what is verifiable, what is credible, what is useful, to make sure we're actually making a meaningful progression towards these climate objectives. So, there's a lot to think about. There's a lot to go through. And I guess that's one of the reasons we're having this webinar. But I struggle to choose one or two or even three priorities because there's a lot to look at across the whole value chain when it comes to the blue economy.
It's something like a mapping exercise that's actually needed, and there's a lot to unpack there. So, Marissa, I'm actually going to ask you. There are, talking about these interpretations of what valuation means. How do you interpret it in your role?
Sure. So I come at this in some ways in the scale game because I work for a very large organization, 85,000 people in 59 footprint markets. And a lot of what we do is either use our lending capital or we use the ability to raise capital in the public and private markets in size to try to make big change and make big impact. And I often say, and I've been a 35-year career investment banker operating in the markets, if you really want to scale and if you want to attract institutional investment dollars, often it's got to be keeping it quite simple and framing the narrative in terms that the investment community can understand. So getting too technical can be our disadvantage sometimes. And so it's striking the right balance between being technical enough so that you're getting at the detail that Josh talked about, the transparency to have confidence, but at the same time not making it so complicated that scale capital can't follow. So simplistically, we say the blue economy is the 7th largest GDP in the world in terms of its revenues that it produces. So that helps to frame, because I think historically people thought, well, the ocean is sort of a public good or it's a government's job. But when you frame it in the context of a quarter of the world's population gets its primary source of protein from the oceans, it begins to, I think, frame it in a way, at least from my world, that corporates and investors can understand. So part of this is that type of discussion. And then it goes to creating a common set of standards that the investment community then can have confidence in. So to Josh's point, in the carbon space, one of the challenges that we face is that there's a lot of confusion, and that breeds a little bit of concern or perhaps even mistrust about, can I actually buy a carbon credit and know that it's going to do what it says on the tin, so to speak. And we're involved in an organization called the Integrity Council of the Voluntary Carbon Markets, ICVCM, if there's not a big enough mouthful. But what ICVCM is trying to do is to create a set of standards, and they've just produced something called the Core Carbon Principles, which is a set of principles about what carbon should do, its longevity, how it should be governed, how it should be additional, and so on. Idea behind that is if we can get the broader ecosystem, and that's everyone from civil society through to the investment community, to agree that on those set of principles, then those can be used as creating ultimately a badge to then vet those credits that come to market, whether they be terrestrial, on land, or blue carbon. And then if everybody says, yes, this is what good looks like, then it's a much easier exercise on the supply side to actually produce those credits. And also on the demand side, the buyers of the credits to say, okay, I feel good. This has that fair trade stamp or the gold star on it that allows me to know that that blue carbon credit is sequestering the carbon that it says it's going to do. An area that we've gotten involved in to kind of take that to the next degree is we've been very active in these carbon markets. We are an investor in something called the CIX, which is the carbon exchange that was created in Singapore. It's a marketplace. And the design of that marketplace is to actually trade carbon credits, create the transparency, and let people participate in a liquid way in and out of those markets. So the first time ever, we launched the first blue carbon auction, and we were also a buyer. So we are saying we want to help facilitate the trade, but we're going to put our money where our mouth is, and we bought 15,000 tons of blue carbon in that first auction to try to help seed the market. So that's one of many examples of how we start with the framing, the narrative, we set a core set of principles, we allow the money to follow, and then we create that liquidity and transparency to try to get that scale capital to work.
Thanks, Marissa. That's fantastic, by the way. And it actually leads very well into my next question to Whitney, which is, why do you think we have yet to create formalized standards for valuing natural capital, specifically in marine environments?
Well, I think that we are making a lot of progress in this area. And so I actually agree with Marissa in terms of taking that like stepwise approach in terms of setting that framework. So one of the steps that we've been taking is actually Salesforce partnered recently with several other leaders in this space, Conservation International, the Nature Conservancy, World Economic Forum Friends of Ocean Action, and the Ocean Risk and Resilience Action Alliance. And in partnership with Meridian Institute, we actually ran like an open source process to develop high quality blue carbon principles and guidance. And the endeavor was, in fact, to kind of set up that framing. What is high quality blue carbon? As Marissa said, can we all agree on what good looks like? And we worked to really create a work product and an asset, a tool that is built on the shoulders of the other work that's being put out in the carbon space at this time. So it's built on some of the leadership and some of the thought leadership of the core carbon principles, for example, that Marissa referred to. And also work to aggregate the point of view from many experts who are trying to create projects on the ground. So about a year ago, we really saw a need to have kind of a global conversation where we can synthesize the learnings of project developers as well as investors in this space, synthesize that and aggregate that into one shared view of high quality in the blue carbon space. And some of the conclusions that we landed on shouldn't be surprising. There are 5 principles: to safeguard nature, to empower people, to use the highest quality information, both traditional knowledge and scientific knowledge, and then to mobilize high integrity capital and to think locally, to localize the design of a project. Those should sound familiar, but then what we did is to build on that and interpret what does each of those principles look like in the blue carbon space. And so that is some of the work that we've been trying to kind of untangle. To your question, is that it can be challenging. It's nuanced work that varies from location to location around the globe. Blue carbon ecosystems are not kind of universally all the same. They're varied from mangrove to mangrove and also from ecosystem type to ecosystem type. So from seagrass to mangrove to salt marsh, you really need to kind of be able to build in some of those localized or technical or local knowledge into how you design a project. So it's kind of a back and forth, an iterative moment where, yes, there are challenges because of the kind of mosaic of blue carbon ecosystem types that we see on the planet. And yet there is an opportunity for us to have that global dialogue and to align around some basic core principles around what high quality looks like. And that was initiated through the principles and guidance. And so we invite others, in fact, to take a look at those and to be some of those first movers. You can join these principles and guidance as an early adopter, in fact, and try and build that snowball effect of alignment around high quality so that we're all kind of pointing towards the same North Star, so to speak. So these are kind of some of the ways we're working to overcome the challenges of varied aspects of blue carbon ecosystems and marine ecosystems, but also some of the opportunities for people to really get involved in that dialogue and help improve and build on what we've, the progress that's been made so far.
Or if you don't mind, just because blue carbon's a really important piece of all of this, but there's so many other areas where I think we're all using in some ways the same playbook, which is, if you want to attract capital and participants, if you can frame something in a way that they can embrace, identifying where gaps in the market are, and then saying, how do we have a common definition or a common shared understanding? That is, the first step to me in creating a valuation of a market that then starts to work. So a very good example is also, saying where have things worked in the past and how do we replicate that just with the blue twist? And a very good example of that would be the green bond market, which is $1 trillion volume market. And the idea behind creating a blue bond public liquid capital market would be to say, what worked there? There was a set of principles that guide what is the definition of green. Could we translate that into a blue format? And work that, is very similar to what he's talking about, where you crowd in a group of different types of actors to say, what do you bring to the table, and creating that sort of framework that allows people to have that common understanding. UN, WEF again, others created the blue bond principles. And that was, I think, a really nice example of people saying, okay, now that is a way that we can express that same thing like we're doing in blue carbon in liquid public capital markets.
And I think, but Marissa, something that you mentioned straight right at the beginning, which is about sort of simplifying the language that you use to talk to clients. And Anna, I actually want to raise something. Obviously, engagement in the blue economy is high to us, but to a broader audience, it isn't so much. And so, I mean, that is one big challenge. So I would ask you is, how do you make the blue economy more mainstream?
So for Oceano Azul Foundation, we are a foundation based in Portugal, but working internationally. Our approach towards valuing blue natural capital, or our approach towards blue natural capital, is actually based on two pillars. First, the need, of course, to protect, restore, and increase the natural capital. And that's something that we do through our conservation work. And so we consider ourselves manufacturer of marine protected areas, because that's where we believe we can actually provide more blue carbon storage. We can allow ways for an increase in marine biomass. And so this is how we generate, let's sort of say, more assets. Alongside our second pillar, which is the valuing the natural capital, meaning adding value to something that has no value nowadays, because now natural capital, the only cost inherent to natural capital is the cost of activity and extraction, not the actual cost of its services or its functions. And this is something that we do through our economic program, mainly our Blue Economy program. This is something, going to your question, is something that we really feel that it's possible to actually connect with the majority of players that are outside the blue economy, sort of say, bubble. This is because by focusing on the blue bioeconomy, we can demonstrate that it is possible to actually decouple our raw materials from fossil-based industries, because we now have the basis through the blue bioeconomy. We have renewable biomass as the basis of our manufacturing processes and our value chains. And also because we understand that through the blue bioeconomy, we can also reach industries that are very far away from the ocean. This is the case of applications that we've been witnessing. We have since 2018 our acceleration program, and also a technology transfer more recently named Blue Bio Value. And this is where we focus on scaling up innovative solutions that are focused on the sustainable use of marine biomass, meaning through biotechnology processes. And we've seen solutions from human well-being solutions, such as new pharmaceuticals, new cosmetics, and new nutraceuticals, to the new bio industries, such as biomaterials and bioplastics more frequently now. Also to new solutions for novel foods and new feeds, and also, of course, environmental solutions in general. And we believe this is something that we started in 2018, so we are going now to our 6th edition. And we're understanding that through these solutions, it's much easier to actually perceive and make people perceive the importance that the ocean has, and the importance that it has to do regarding our first pillar, which is to increase our natural capital, and also it aims at valuing that natural capital. So this is a valuable bridge towards going outside this area of the blue economy and taking the ocean and the ocean economy to the mainstream value chains that are currently very far away. And this is an approach that it's also more understandable to people, because it's very pretty much based on the need of actually protecting nature and increasing nature. And when we start seeing the value in these two angles, the approach towards the ocean and the blue economy also starts changing.
Thank you. And in fact, Whitney, I'm going to come back to you on this unless anybody wants to add anything to Anna's comments. But what is the greater social value translating these benefits to governments? And can you talk more, and businesses, of course, but can you talk more about how businesses can create a strategy that integrates nature into a strategy?
Yes, absolutely. So some of the key value points I think that can be shared around, in particular, these mangrove ecosystems and coastal ecosystems. Salesforce focuses a great deal on those ecosystems because we're really thinking about nature, people, and biodiversity in one package. So we're looking for solutions that can really address climate, nature, and equality in one fell swoop. So we really feel that the mangrove ecosystems and coastal ecosystems can deliver in these ways, because mangrove ecosystems, in fact, and these ecosystems can buffer, in fact, against storms and storm surge and flooding. They also serve as important resources for biodiversity. They are the nursing ground, feeding ground, and breeding ground for the fish of the sea. And then they also then serve as sources of livelihoods for these local communities. So I think it's important to be able to articulate those to policymakers, as you mentioned, as well as to investors and corporate investors in particular. And some of the opportunities and ways that corporate players can get involved are, one of those is 1T.org. So Salesforce is a founding member of 1T.org that's hosted at the World Economic Forum. And it is a platform that is driving towards protecting and restoring and growing 1 trillion trees this decade. And mangrove ecosystems are a key opportunity for the reasons that I just shared to really drive like really high value projects within that campaign and that initiative. So it's a great way to kind of work with other corporate leaders and exchange knowledge and best practices and discover high quality projects and then make coordinated investments in nature. So that's one key measure that other corporates can include in a nature strategy. And then the other thing that we've done is actually to integrate our nature strategy and our climate strategy together. So we have a climate strategy that has 6 pillars, and first and foremost focuses on reducing emissions, but also focuses on investments in nature, investments in driving changes in policy, investments in technology as well. So we're trying to kind of take a whole company and a holistic approach to our climate strategy. And then we married that, in fact, with a nature strategy, which looks to understand what our dependencies are and our impacts are on nature so that we can make smarter investments in nature and try and really leverage nature as a key solution for those key crises that I mentioned: biodiversity loss, inequality, and climate change. So really trying to, I think as a company, you can take a holistic approach and try and build in what are your superpowers. What is the way that you can leverage your whole company outside of your 4 walls, in fact, to drive change? And so that's some of the strategy that we take in those 2 measures, and those are all published that others can kind of riff off of, but also provide feedback on. We want to have like an open dialogue with other companies around how to drive change. And another key initiative that I wanted to mention, which is a really great opportunity for companies to get involved, is in addition to 1T.org, there's also newly launched a mangrove breakthrough, which was launched by the Climate Champions and the Global Mangrove Alliance in Sharm el-Sheikh. And this breakthrough is an initiative to mobilize $4 billion to secure the future of mangroves on our planet. And when you think about it, $4 billion to secure the future of an entire ecosystem on our planet actually it's pretty achievable. But we do need key thought leaders in the area of finance at the table to help shape what are the financial pathways going to be to that $4 billion solution. And to break it down a little bit, the Mangrove Breakthrough Initiative is to halt loss, restore half, double protection, and sustainably finance mangroves on our planet. And that equates to, again, $4 billion to secure about 15 million hectares of mangroves. So there's a great opportunity for companies to get involved, in particular those with financial expertise at this early formative stage of this breakthrough. But you can also get involved by joining 1t.org and making a mangrove pledge. And individuals can even get involved today. We've identified a high quality mangrove project that we're really excited about in Guatemala, and we want to create an opportunity for everyone to get involved this month during World Ocean Month. So we're actually running a fundraising campaign for others to also contribute to this project in Guatemala, and you can discover that at trees.salesforce.com. So those are a few ways that you can kind of build a holistic strategy and also get involved in global initiatives that are outside your own four walls and try and scale change.
Thank you. And Josh, I mean, you are obviously advising, you yourself are a marine biologist and kind of leading from where Whitney's sort of talking about. I mean, an organization like Salesforce has built out a team with expertise all around to kind of help embed these strategies into their everyday business. You know, when you're trying to devise how to sort of embed ocean themes into a company's biodiversity and climate strategies, who should you seek out for support, and then where does, at what point or how do you insert the topic of valuation?
Yeah, no, excellent question. It's not an easy one to answer because there's just so many different routes, and I think what Salesforce and what Whitney has been doing. I mean, I've read your climate and nature strategy and the document, everything, and it's really, really good reading because it helps showcase how to start in a very pragmatic way, right? When we talk about looking at expertise, right? When we talk about anything to do with the blue economy, you need the right experts around the table. I think one of the reasons I moved from marine science into a firm like KPMG is that I wanted to bring the science and the expertise that I'd had from my marine research and studies into the boardroom, sitting with organizations to talk about, right, what is your enterprise objectives and how can we weave in biological and environmental principles into that work. And I think that's the first thing, is getting the right expertise. Because I think there's a lot of information out there in the market to learn, but there is a difference between understanding what the kind of main drivers and the themes are and actually understanding the biological interactions and the things. And I think, we've mentioned it on here as well, is that, these ecosystems range by species, by region, by, different conditions. So it's important to understand, what causes those dynamic changes, because that helps influence your activities with nature. And I think one of the things that we start to do, or at least I'm starting to do with clients, is shifting a little bit of the conversation around blue carbon and offsets and credits. And, I work for an auditing company. I am an ex-auditor as well. I love looking backwards and seeing what we've done in the past, and let's see what we can do now. But I think I've also taken a lot of learnings from how the offset conversation in the terrestrial market has worked, because that's driven a lot of investment into carbon offsets, which is great. But it's kind of used that as the patch to focus on just neutralizing emissions rather than net reductions and decarbonization. And the great thing about the ocean is it can provide both. It can provide means of decarbonization as well as carbon sequestration. So what I like to use as a term, it helps at least shift some of the conversation and the perspective, is this ecosystem role and biodiversity interactions rather than just on carbon, because carbon is just one small facet of what the ocean's potential is. The ecosystem dynamics, the resiliency that nature provides to society, the protection it does to our coastal resources, and as well as the energy that it can generate, the transportation links that the blue economy provides. All of this is a source of helping reduce emissions as well as protecting nature as well. And the knock-on effects that we have through ecosystem services really helps understand that actually there's more than just purchasing offsets and credits through the ocean. There is a lot more. There's a lot more that the ocean can offer if we start to utilize it as well. So that's the first thing, is starting to shift the perspective and the mindset around the ocean, not just being a carbon sink, but being a lot more a lot more around that. And that ultimately goes into that valuation. I do a lot of work with economists and modelers around how do you value nature. And it goes back to that point I made about pragmatism versus perfection. I can sit here for decades, and people have, very clever scientists have tried to understand all the intricate details of the ecosystems. But to be able to work out exactly the role, let's take a whale, for example, what a whale has on a wider ecosystem. But if we just focus on making sure we understand every little interaction, we're never going to actually be pragmatic and be like, right, this is the value that we need to be putting on a whale. How do we get that on companies' balance sheets? Are we looking at this as an asset? Are we looking at this, the destruction of this? Is it recognized as a liability? Let's put these into cash flows and start thinking about actually how does it make fundamental business decisions? And that's the balance that we have. And when it comes to valuing, it does require very specific tools, not necessarily modeling tools, but actually ways of just understanding what interactions go in and how we put a monetary value on that. And even if a monetary value is the right value, I mean, we can argue that there are different ways, but putting a dollar sign on things is, it's a universal currency that we can all understand and make decisions around. So we have to be pragmatic in some aspects. But I start to try and shift the conversation into actually looking at the wider ecosystem benefits, and then actually looking at how other, organizations and academic centers have started to value certain regions and how we can start to translate those valuation methodologies here. Take seagrass, for example. There's a big barrier to getting seagrass carbon sequestration kind of as a verified carbon credit or as a verified ecosystem credit. It's been a methodology around what goes into it, taking the principles that we've just been speaking about, but putting that to like a standard and a methodology that, verifiers and certifiers can go again and, check off against. And I think something has just come out in the coastline around France around a new methodology of verifying and validating carbon sequestration in seagrass, as well as looking at some of the wider ecosystem benefits. And that's becoming that could be a methodology that you kind of rip and duplicate to other regions as well and build off from. And that really helps actually look at how to actually tangibly value a natural capital, in this case, a seagrass as a commodity. So it does get quite complex, and we use the biodiversity hierarchy as well as a process. And, I really like the biodiversity hierarchy because it shows offset being the last thing that we do. And the first thing is all about the avoidance and minimization, and then that transform and restoration. Science-Based Targets Network came out with that, with their new targets for nature. And, there's a lot of good examples in there around what actual activities organizations can start to implement that will both protect nature, restore it, rehabilitate, and then also actually put some metrics on it so we can track it and assign it. And that's been really helpful as well. So we put all of that kind of gets rolled up into that valuing nature conversation that I have with a lot of different organizations.
Thank you. And Marissa, Josh talks about sort of putting it onto the balance sheet. Do you think that doing that, does that sort of put off businesses? Or should it incentivize them?
Yeah, no, it's a great question, because if I translate the work that we do, most of the nexus of my bank is the developing markets. So it's developing Asia, Africa, Middle East. And in some of our markets, we're 59 footprint markets. About 33 of those markets still don't have a net zero commitment, or the commitment is beyond 2050. So in so many of these developing worlds, which are the ones who either have the greatest carbon stores and natural assets, or are disproportionately affected by the things that are happening in our oceans, we need to bring them along. And, literally getting carbon emission data for them is hard, let alone then saying, please put, valuation of natural ecosystems on your balance sheet. I mean, their heads start to spin, honestly, if you're having those discussions with them. So it kind of goes back to my opening comment, which is, if we can keep it simple, what are the 3 things that I can do as a company or a government that really matter, and drive them toward those things? I think we're going to have better outcomes, at least in the developing world that's early on the sustainability journey, and leave the kind of technical bits to sort of the practitioners in the market that can help identify what those materiality things are. Because imposing that on companies or governments, I think, is going to be a tall task. So one of the ways we're thinking about this is, as a bank, what do? We help to take the power of investor capital to drive. We can use that to drive behavior change. So, for instance, we've created, a shareholder engagement fund in my prior life, where the capital in that fund was tied to behavior change of companies. So this is all about the oceans. And the investment thesis was that most companies want to be better ocean stewards. They just don't know how to do it. So if you can give them three things to focus on, they'll be happy to do it. They'll create shareholder value and the investor wins. So it is taught that investment says, essentially the investor says, I will invest in your company if you do these three things. Then the company loves it because someone's helping them figure it out. And you're usually doing that in combination with someone who is a practitioner in the space. But you're using those dollars to drive behavior change and keeping it simple. Another way we do it and how we're embedding it in our own business from a lending point of view is we can use lending capital to do those nudges. So, for instance, we have put a position statement, and those are our restriction places that we don't go as a bank. We put in place a restriction that says we have an absolute prohibition on deep seabed mining. So we will not lend to any company who's doing deep seabed mining. And companies who we lend to who might think about getting into that new field, which is just starting to take hold, which is highly potentially destructive to the ocean, we can say, we can't participate with you or we can't act for you if you do that. So please think twice about doing that. That's the negative version of that. The positive version is we also say we encourage companies that do certain things. So our lending capital is very free if you will take into account in your company strategy and behavior certain things to do with the ocean. So that's another area. The final thing I'd point to is when we're dealing with governments and government intervention or support or nudges is critical here. When I think about something as simple to Whitney's point about how do we foster more activity around mangrove projects. Imagine what if you have a government that's an island-bound nation that's really susceptible to sea level rise and aggressive storm activity. Oftentimes, what did the government do if they don't know any better? They put out an RFP to traditional old ways of creating barrier protection. So they send it to the developers who have big cement barrier walls, which we know fundamentally are not great for the environment, but also don't work very well. If you said to that government, by the way, in your RFP, why don't you go out to mangrove projects, planters? It will be more effective. It'll feed your ecosystem. It probably does a better job, and oftentimes it's cheaper. Isn't that a great way to rethink how you will create coastal protection for your beach or your area? So there's an education piece of this, but a translation of that into how you would attract both projects and capital and participants. So those are just a few examples of the types of things that we're doing.
And Marissa, you make me, you're sort of making me think about the UN loss and damage fund and how you're going to determine that, and valuing natural capital is paramount to that. Because it's actually it's to the benefit of those small island states. And I want to sort of come to you because obviously we live in a world with limited and depleting resources. So how should a compensation scheme work? How should businesses or governments determine when to compensate with restored natural capital versus money?
I think that is the fundamental question. Is there a versus, a nature versus money, nature versus profit? And in our opinion, that is the fundamental cause of the imbalance currently. Because if we look at what are the nature-based solutions, there are opponents sort of say that there is a versus economic-based solutions, and they are currently not intertwined. And there are a lot of these wonderful efforts that we look for, and some pilot cases, and then some efforts such as the blue carbon offsets and other projects in which we understand that we are starting to make these steps towards actually intertwining and making nature conservation profitable in sort of way. And in our opinion, and getting back to also what Whitney said regarding a holistic approach, and also what Josh mentioned regarding the scientific knowledge behind our decisions, in our opinion, it's very important that we see all of these in a more overarching approach. And here we need to tackle three main areas, sort of say the science, of course, because we still lack a framework and a common framework that encompasses, let's sort of say, the natural valuation or the natural or ecosystem services evaluation. And a common framework still doesn't exist. Either they are too technical or they are too vague. or they are difficult to tackle, or they are not appropriate to and all of ecosystems. And so this is something that science needs to give us more answers, and to start also working with more of these areas that need to come together, such as the second one, which is the finance, of course. The financial tools, I think we're getting along there, and we're seeing some of these efforts that I was mentioning, some of these financial tools and instruments and mechanisms that are starting to put in place and being tested. But we understand that they are not common economics yet. They are not embedded. Nature is still not embedded, for instance, in our GDP, and so it is still out of reach. Let's sort of say in our current valuation, economic valuation efforts. And the last one is the legal, because we don't have a common international, national, and regional legal framework regarding how we assess nature and how we protect nature. And this is particularly important when we meet these three pillars, the science, the legal, and the finance, because most importantly, we don't make all of these three languages work together. Marine protected areas are just going to be something that is on the scientific scope, and we are not actually resulting into effective conservation and lasting conservation. The legal instruments also need to be more pragmatic in terms of how can they be applied into the national systems and the transboundary systems. Because when we look at the ocean, transboundary is a very important issue, because we cannot just look at individual efforts and national or regional efforts, which are very valuable. But in the case of marine protected areas, they're not going to be sufficient unless they start getting intertwined between other and related with other countries, and actually making that a network of marine protected areas. We usually call it even the banks of natural capital, which are the marine protected areas. They need to start working together. And of course, also with the finance and the sound instruments that need to actually be able to reply to the scientific requirements that scientists must put together, and that all must be glued, of course, with this legal aspect. So, in our opinion, this shouldn't be a versus; they should be coming alongside, and we believe that it's the day that we can do that. The conversation is going to be a lot different.
But do you mind if I jump in? There's one thing that I 100% agree with you, and I think some of this, though, is how can you express that it's not a versus in a way that current systems can embrace? Because the financial system does, like it or not, speak in return terms. You know, they think in a return on investment context. And I think where in the past conservation's gone wrong is it was very focused on it's really good and it'll be a good thing for all of us and you should get that, you know, or the tragedy of commons type approach, which is it's not going to be here forever, which is why we're here in the first place. Nobody's been able to get that value into the traditional system equation. And my pragmatic side says, boy, would I love it. And there's a whole lot of intellectual capital being applied to how do we rewrite the financial system and all of this, you know, new accounting systems that, you know, put this onto your balance sheet and all of it. But if we wait around for that, I fear it's hard enough. You know, we're sitting here still trying to figure out how to get to net zero on carbon emissions. We don't have 10 years. So I guess we're taking quite a pragmatic approach, which is hopefully thinking about translating some of this in ways that the financial system can embrace. So a perfect example is when you go into a marine protected area project. At least my experience has been, you speak with the government and say why this is really important to them. The first question they say is, gee, if I'm going to protect this, what am I giving up? Am I giving up fishing revenues? That's the first question. And if I'm supposed to give up those fishing revenues, who's going to compensate for those losses to the fishermen or to my economy? What we need to say, and we're much more effective now than we used to be, it's saying, if you leave this area alone, the fish stocks come back in spades. And, you know, you can create this ongoing annuity for your country rather than the short term. You're going to, you know, destroy this wonderful asset. And then there's no coming back type discussion. And you brought up this question about the loss and damage fund. You know, most people are thinking that adaptation finance, which is sort of loss and damage, are paying for, you know, the sins of others, you know, on the poor people who are most affected. Most would tell you that's the government's job. not my job, if we could translate it instead into an economic return. So we produced a report for World Economic Forum this year called the Adaptation Economy, where we were trying to say, if you just put some money into adaptive business models, whether it be marine, whether it be agriculture, whether it be resilient infrastructure that can withstand climate change, the disaster avoided will be 12 times the investment that you put in up front. So how often do you get a 12 times ROI on anything these days? If you can just put the money to work, this is a commercial proposition for you. It's not government's job and it's not philanthropy. So I think working together, as Anna said, with the lawyers, with governments, with private sector, with corporates, all to try to frame that in a way that you could create the economic equation, where I think that's a faster, better solution than hoping that we'll start pricing all this into the traditional economic systems. It's just going to take a really long time and be a hard slog. Don't know if my peers agree, but I just worry that, that perfection, waiting for the perfection thing is like waiting for anything that's actually going to work from a money point of view.
No, I just wanted to kind of validate that. I totally agree. Right? Perfection, it's great to have perfection, but you're right. Pragmatism is really key. And, your comment about keeping things simple is needed. And I think we've just got to make sure that we're not losing a lot of the nuances that are different around the blue economy that have been used in the terrestrial market. And the idea of talking the same language, not necessarily in like English or French or whatever it might be, but thinking about like that, what do we define as value and how are we defining returns? We actually ran a session out in Singapore earlier this year, like an ocean hackathon, where we brought a bunch of the capital markets into one room. We brought a bunch of the small aquaculture farmers and the representatives there into a room to be like, we want to spend some money and invest in the blue economy. We need your money to protect this. But, when we talk about risk, there was this funny story where, the bankers went to an aquaculture farm. They're like, what's the biggest risk to this intertidal aqua farm? And they were like, well, if it rains, everything dies. And we're like, don't you have monsoons for like 3 months a year or something like this? The risk, like all the alarm bells went off. So there isn't a financial literacy that you need to bridge, because the actual answer is, well, yes, but if we put a rain cover over it, happy days, where the risk is averted. So there's a lot of that conversation that needs both sides to, sort of kind of come from their two ends to discuss. And, accelerators, accelerators versus hackathons, I found, have been really useful in helping really put create like a melting pot of these ideas and this expertise, but then being quite geo-specific as well. Because I think the answers that we found out in Singapore, when we run the accelerator over here on the west coast of Canada, can be very different. The same principles, which Whitney kind of has been talking about, apply across all, but it then does start to get quite specific. So I always find it difficult to use kind of global priorities and then trying to apply it to a region. There always needs to be a bit of specificity and a bit of work, especially because it's not simple, all of this work. It's very complex and requires, some complex ways of assessing, but not going too far that just gets grounded in academic research and we get nowhere and we start dragging our heels because, one methodology is not quite perfect. So I agree that there needs to be some kind of a simplified approach. And I think one of the ways we start to achieve that is by that coalition of those two industries kind of being in through a kind of a creative accelerator type event where you can actually see the work on the ground. Because there were some really great ideas from like creating some kind of a mutual fund around loads of different companies getting exposure to different blue economy related projects that they can then use as part of their own, meeting some of their own objectives and their investment goals, as well as channeling investment into projects. Because a big problem we found was how do organizations that are landlocked, like in central Germany or in central Europe or in the middle of the USA, how do they, if they're not got a coastline, how do they get involved? And I think that's always been a barrier as well. So using these kind of, education sessions and like changing the way we view what the blue economy is and how we are valuing it will help, open up this to the global commons rather than just assuming it's small island nations and it's organizations and countries that have a coastline.
And I'd love to just jump in and add one additional thought to this conversation, which is that I agree we need to have the really a strong understanding of the value and the economics of a project in order to then access additional finance and to create revenue flows for these projects. And yet it's very hard to get to that point for a lot of early stage nature projects. We need to also recognize that a lot of communities are organizing around this ecosystem that they value and that they live near, and yet taking that step and reaching that point where they can then articulate this is the value of this ecosystem in dollars and cents in terms of the flood risk reduction or the dollars for the fishery. That's a big step that requires some early stage risk tolerant capital in order to get to that point where you can really frame the project and access additional capital flows that could be much, much bigger. And so I think that's something that I just wanted to add in, is the need for us to really think collaboratively around how we can bring, again, our differentiated resources. Different organizations have different types of resources, and even within each organization, you might have a suite of resources to tap into. So how can you then sequence those resources in order to help bring projects from an idea or a concept or potential to a clear articulation of that value so that they can then access additional types of capital? And so some of the ways that we're doing this at Salesforce, and we think about this a lot, is we have a philanthropic fund, $100 million for ecosystem restoration and climate justice this decade. And this fund we look at this as risk tolerant capital that can be used for some of those early phases to develop a feasibility study to understand and then articulate a business case for a marine protected area or for a particular ecosystem. And so that risk tolerant capital then is the philanthropic dollars. We also have additional dollars that are separate from that are for driving our commitment to 1T.org, which I mentioned earlier. So we made a commitment to conserve, restore, and grow 100 million trees this decade. And those dollars tend to be used more for the later stage projects and the implementation of those projects. And then we have separate dollars that are the carbon dollars. And those are actually then where you get to kind of the end of that pipeline where you're really looking for projects that have very clearly articulated, these are the biodiversity benefits, these are the livelihoods benefits, and these are the carbon benefits. We recognize that it takes a lot of work to be able to get to the point where you can articulate that and secure a purchase of a carbon credit. And again, that brings you back to the philanthropic funds, which we allocated, some of those funds last year, in fact, to some early stage blue carbon projects to help them build out their feasibility studies. So it's kind of this cycle that can use different parts of the company and different types of resources. But even within our own four walls, it's not going to be enough resources. And so we also look for other types of partners who can co-invest or bring different types of capital, in fact, alongside ours to see more effective change. And one other example I wanted to share around what teams need in order to bring a project to fruition is that it's not always dollars too. You can't just throw technology at a project problem. You can't just throw dollars at a problem. So again, trying to tie in this holistic approach. Another example I wanted to point to is that we have a Salesforce Accelerator for Nature, which we launched last year. And what we're doing there is we selected 4 teams who are developing technology for nature, and we bring to them some it's unrestricted funding for them to implement their project, as well as 2 years of these are organizations that are building technology solutions for nature on Salesforce technology. So they have then access to Salesforce technology for 2 years, as well as mentorship and technical assistance from employees at Salesforce. So there you have kind of that 1-1-1 model of the people's time and expertise, as well as the dollars that are unrestricted to implement the project, as well as the technology. And we're hoping then that by bringing that kind of holistic package and that suite of solutions together, that then those projects can then be accelerated even further. So those are just a couple ways where it's one, sequencing capital, and then the other is thinking holistically around how you're assisting projects, to really bring them so that they can come to market and access additional types of capital that I wanted to kind of bring as some solutions for others to tap into.
Thank you. And Anna, actually, I mean, obviously you've been doing this at the Oceana Azul Foundation through your own accelerator program. Can you briefly talk a little bit about how it's helped, that this particular program has helped or can help increase natural capital, the value of natural capital?
Yes. So through our Blue Bio Value program, which is an accelerator of startups dedicated to blue biotechnology innovations and more recently also dedicated to technology transfer, so bringing the solutions from the academia to the market. We've been witnessing, of course, firstly, the enormous transversality of the several applications that come out of blue biotechnology. And as mentioned before, this adds a lot on how the ocean economy is perceived into current existing value chains that are very distant from the ocean. We've also been witnessing how many of the marine biomass that currently has no use or currently is perceived as not as valued actually is starting to have an application or a viable valuation mechanism. And we see this both because we understand that new marine bioresources are starting to have applications that were unforeseen before. And so science brings us this knowledge and helps us understand how we can pass on these solutions and actually have an important impact on the economy. And these solutions are very important because they usually replace negative solutions. And so we do believe that the natural capital here comes into force as a solution for the actual natural capital. And we've also seen that through our accelerator, a lot of those byproducts and co-products from other industries, mainly the blue economy industries, are starting to have new applications. And this is also really important to scale up because it's of course one of the main answers for a circular economy drives away from the current linear extraction model. And so these are two ways in which the natural capital comes in hand as a solution and also as a way of being profitable in a more diverse way that is currently not foreseen.
Thank you. We're running out of time, so I want to see if anyone has some final remarks before we summarize.
The only thing I would point out that might be just to share as well is that Whitney gave a great example of doing all of that within one company. And, I think Salesforce is quite special in that capacity that you have the ability to play in all those areas where there are gaps. But equally, I mean, what you're effectively articulating is a perfect expression of blended finance. This idea that you need catalytic capital to solve certain problems or philanthropic capital. Then you need low returning capital or something around that arena. You need expertise and partnering with those who really know whether it's they can lend their expertise on tech or whether it's frankly partnering up with an NGO who's an operator on the ground who really understands how to get things done in a visceral way. All of those things blending together alongside the more traditional forms of finance often create these incredible multipliers and the ultimate solution. So I think you can do it as Whitney does within your own company, but you could also tap into those partners that are typically have been, I guess, in if you look at times past, operating in very discrete silos. Today, what's exciting, I think, in all spaces in the conservation world, and particularly oceans, is this collaborative way of blending these unnatural actors together for maximum benefit. And we're seeing that in small ways in specific projects, but we're also seeing it in some cases at country level. And I think that's quite an exciting place to be. And so if we leave anybody with some hope that's cracking some of these more difficult spaces, I think sometimes the power of collaboration is the ticket.
Well, that's a lovely way to sum up this discussion. And in fact, I think having all of you here is a perfect example of that, and the work that you're all doing in your own space. And I mean, what I've heard from all of you is that obviously we need to simplify the language. We need more collaboration. And in fact, we talk about looking to other industries for case studies, but in fact, I think this is a perfect case study for others to learn from as well. We talked about this sort of not sort of waiting until we've perfected it, but there is a need for a long-term strategy and an ideation process, and also some short-term strategies as well that are needed, and innovation as well, which Anna talked about. I want to thank all our panelists for their time today and for participating in this discussion. It's an exciting ocean year, and we have some brilliant events lined up. We've got the Global Plastics Summit coming up in October from the 11th to the 12th in Bangkok, Thailand. It's an independent global forum under our banner, the Economist Impact banner. The summit has been curated to build and sustain momentum for the UN Plastics Treaty, critically take stock of progress at the halfway stage, and offer a platform for diverse voices to be heard in pursuit of an ambitious treaty. And then, of course, next year we will be hosting our 11th annual World Ocean Summit in Lisbon, Portugal, from the 11th to the 13th of March. We're very excited about it, and I think it's safe to say that we try to bring all these collaborators together, and we look forward to seeing many of you there next year. Thank you.